Will this be the shortest recession in history? Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. I've got my morning stein of coffee and I just thought we have to look at this article from Yahoo Finance because, well, I think it's a crazy question. Will the COVID-19 be the shortest recession in history? Will it be the shortest recession in history? What do you think, everyone? What do you think? Let me know in the comments. Previously today, we looked at, just the long road to recovery that is needed because business conditions and confidence has just crept into positive. Just crept over to positive. But it doesn't account for any of the new restrictions and lockdowns that have been introduced. So will this be the shortest recession? I'd bet a carton that no, I don't think it will be the shortest recession. I think we're technically everyone, Australia isn't even in recession yet. Okay? We need 2 quarters of negative growth. So 2 quarters of GDP going down before that you technically meet the definition of a recession. Then you'll say, oh, you've been in a recession for 2 months, for 2 quarters. I know it feels like a recession. I know we bloody well are in one. But technically, will it bounce back after this quarter, guys? I don't think so. Unless, well, I can't even imagine any. We need some tough times, sadly. We've had it too good. It's like, a forest when it grows up. Yeah, sometimes the trees at the top need to be burned out. The canopy needs to be cleared so the new growth can emerge. Shouldn't we be learning from nature, guys? All those, well, even just indigenous management of the scrub, the bush here in Australia, they'd burn it out, they'd manage it, they'd control the environment. A lot of history there. Or am I drawing analogies where there shouldn't be? There's no will, though. There's no will now for, well, the recession Australia needs to have sometimes, for economic tough times. People have it too good. Let me know what you think. Do you think this will be a fast recovery? Let's have a look. The pandemic has created one of the worst recessions the world has seen since the 1930s Great Depression, but it is also shaping up to be one of the shortest. Okay, we'll see. According to research from the Commonwealth Bank's International Economics team, the global economy is already showing signs of bouncing back, following a very deep contraction, but very quick at only a few months. The months-long lockdown in the first half of 2020 means most economies will contract in 2020, but economic growth will likely be strong in the second half of 2020 in the absence of widespread lockdowns, said CBA Head of International Economics, Joseph Capuzzo, in a note. Well, there you go. In the absence of widespread lockdowns, in the absence of widespread economic restrictions, do you think we're going to have an absence of that? There seems to be the will to call for more and more economic restrictions. However, the pace of the recovery is expected to be short-lived, with unemployment and underemployment rates set to take years to return to pre-pandemic levels. So they're saying, it'll bounce back. It'll bounce back really quick, but, unemployment will remain in the toilet for years. So the average punter will feel it for years. It'll have an impact on people's quality of life for years. I think there was another article where they're saying it'll take a generation to recover. It'll take a generation to recover. In response to the pandemic-triggered financial crisis, central banks like the Reserve Bank and the US Federal Reserve tightened by cutting interest rates and buying more assets, which helped financial businesses and free up cash flow. Oh, that was so nice. So nice. The quick effort of central banks shortened the financial crisis to only a few months, but the scars of a deep, albeit brief recession will last years. Well, we'll have to see, everyone. This isn't over. The lockdowns, which are being implemented to mitigate the spread of this illness, we haven't won the battle, everyone. There hasn't been a global push saying, okay, we're now adopting the Swedish model. The Switzerland model. that hasn't happened. So, sure, I mean, it can jump right back up due to confidence, but it can plunge right back down again, everyone. Principal Global Investors Executive Director and Chief Global Economist Robert Barr also said the US economy may be expanding again off the back of a record short recession. The world's worst recession in 90 years began in March this year, but is also the shortest in history, ending in April or May after 2 or 3 months, he said. A recovery from the worst global recession in decades is possibly underway. So is this the V-shaped narrative, guys? Are we seeing the V-shaped narrative? I thought that discussion was entirely dead. I thought it was out the window. But I guess, there's some people still arguing for it. China, the epicenter of the pandemic, was also the first to emerge from lockdowns, and government data has revealed economic improvement in March. The Eurozone is also showing signs of life after a devastating collapse in March and April, while Japan, which had a weak economy before the crisis, is recovering, though it will be gradual and protracted. A few countries, India and Latin America in particular, are still struggling with late arrivals of the illness, but we see recovery in much of the rest of the world. BetaShares chief economist David Bassani warned that while a recession could be short, a double dip was possible. There we go. That's the V-shaped argument, isn't it? Boom, boom, boom. Again. And then maybe a long tail and then up. The definition of a recession focused on the rate of change, which may well now be positive after a huge slump over April and May, but the level of activity may remain well below pre-virus levels for some time. So it could still feel like a recession for a while, he told Yahoo Finance. Exactly. And look, with Afterpay shares, shot right up. There you go. Is it worse to lose 1 million jobs for a month, for 20 months, or lose 20 million in the first month and recover 1 million jobs over the next 20 months? The latter is a short recession, but still large loss of employment for a long time. On the upside, the deeper the recession, the stronger the likely bounce, at least initially. It is easier to get an initial V-shaped recovery after a very steep decline. The Great Depression began after a Wall Street crash in 1929 and rapidly spread across the world. It took Australia about a decade to recover. A decade. So could this be the lost decade that people are seeing? What do you reckon? It's not sounding like a fast recovery. Maybe technically we'll recover. We'll go 0.1% growth. It was only 2 quarters, and then it was 0.1% growth the next 5 years. They're right. It's going to feel like a recession for most people, for the average punter. It's going to be tough. It will be tough. What does this mean for Australia? According to Bell Direct market analyst Jessica Amir, the virus pandemic has brought with it a short, sharp and steep economic downturn to Australia, but a snapback is expected. Is it? This was written yesterday. So, okay. Do you think a snapback's expected, guys? The Australian economy is likely to fall 4.4% year on year in this calendar year before returning to growth of 3.6%, she said. There are signs that the harder hit parts of the economy are starting to rebound. State governments expect Victoria have begun easing business and interstate border restrictions. No, they haven't. Retail sales are up thanks to increased demand in online shopping. Meanwhile, business conditions are also recovering. Well, yes, business confidence and conditions have recovered, as we've seen earlier today. And even anecdotally through people I'm talking to. But that could all be switched off in an instant. It's next month's data that we're going to see. If we're going to have these constant up, down, up, down, up, down, there's a level of uncertainty there. And even if things are getting better and you have that level of uncertainty, people are just going to take their time before they increase their capex or before they start taking on people. That's going to make a recovery even worse. It's all to do with uncertainty. The ABS household survey showed most Australians are willing to splash the cash with extra subsidies, 2 $750 bonuses to low-income households, pensioners and students slightly helping. In the jobs market, wages growth is returning to areas like accommodation, food services, education, and arts and recreation and transport. According to Cap Uruso, China's recovery strategy of increasing infrastructure spending will directly benefit the Australian economy. So, I mean, here's the thing. There's a lot of political posturing between China and the US, and Australia is being dragged into it, and a lot of threats about the Australian economy. I mean, it could damage us with international tourism. It could damage us with international trade. It could damage us with international students. Big numbers are coming from China. And, you know, we export a lot to China. We export a lot to China. So if we'll bring up one of my favorite websites. And I'll just jump that here. And we'll bring that up here. The Observatory of Economic Complexity. And we'll jump over here. You can see the complexity of our economy is pretty low. Guys, we're not that advanced an economy with what we're manufacturing. That's the thing. To get our complexity up, it's going to be a long road. It's going to be a long road with significant government intervention or significant government pullback to make it easier for businesses and entrepreneurs to exceed in Australia. I would argue, and this is one thing Rachel's put to me, she thinks Australians don't have the will to do the dirty jobs, the dirty manufacturing. They're all talking about, oh, manufacturing this or this, you know, heavy industry that, but they don't want it in their backyards. They'll put so many greeny and hippie regulations on everything, they won't allow it. I think she's got a point. I think she's definitely got a point. What do you think? Do you think all the hippie greenies that are arguing for this or that will want, you know, metal works in their neighborhoods? Will they want factories, you know, producing toxic byproducts? So you can see here, China, 35.5% of our exports. Now, if they increase demand for our resources, we should be able to click here and it should highlight what we're doing. We'll see. There you go. This is what we're exporting to China. 44% iron ore, 12.1% of what we're exporting is coal, petroleum, even some gold, a bit of wool. So a lot of raw products. So demand for all of these will increase. And those then will flow through to other parts of the economy. Iron ore, big chunk of it, Western Australia, guys. The Western Australians. Then that could hopefully flow through to the property sector there. And, you know, maybe mitigate some of the sharp falls that property has had over in WA. Look at Perth there, heading down. So, I mean, is that the ray of hope that Australia has? But then again, it's no different to the GFC. It's the exact same thing. Will we learn any lessons? Will we be saved by the fact that we're China's quarry and, you know, just pump everything back into housing again and just the same road? I mean, it looks like they're throwing every single thing they can at housing, at property. You know, here's 20 grand, here's 40 grand, boom, boom, boom. They want to keep it going just so the boomers can cash out. We'll have to see, everyone. We will have to see. I would hope there'll be some resilience. You know, we'll turn the corner. But, well, for a nation to do that, you need to go through some tough times. And is there political will for that? Let me know your thoughts in the comments. The mere mention of higher infrastructure investment supported the iron ore price. An increase in commodity prices is like a pay rise for the Australian economy, he said. The low cash rate will also assist Australia's economic recovery, with the low interest rate to help Aussies pay for their mortgages, business loans and overdrafts. However, Australia will need to contend with the loss of tourism and education exports due to the border closures, as well as the impact that reduced immigration will have. CBA predicts Australia's GDP will contract by 3.8% in 2020, then see growth of 2.4% in 2021. So, I mean, the takeaway here, we could be seeing a W-shaped recovery. You know, we could plunge and then get to slightly up, really slight growth for a couple of years, but it's going to feel like a recession. It's going to feel tough for a lot of people. What do you think, everyone? Are we looking at another great recession? Will it be like the Great Depression? Will Australia be saved? Be saved once again by China? Let me know your thoughts and opinions in the comments below. You know, will it be short or long? How are you preparing? As always, thank you for watching. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join us on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, guys. I'll see you next time.